Internal reconstruction is a very important chapter for the examination point of view. When it comes to internal reconstruction, this internal reconstruction is all about passing the journal entries and preparation of the balance sheet. Preparation of the balance sheet is not a new thing for the BCom or BBA students, because many times many balance sheets you have prepared and you have made them tallied also. And passing the journal entries in the first PUC only, you have learned how to pass the journal entries. By having this knowledge, this internal reconstruction problems can be solved very easily. So that the basics of the problems that I'm going to explain you, I'm not going to tell you anything about how to frame or else how to prepare the balance sheet. But before that, passage of the journal entries, that is very important. Here is a problem that I'm going to read out. It is being displayed. You can write it down. A company limited, A Limited, had a 10 lakh authorized capital of rupees. A company limited had 10 lakh authorized capital on 31st 12 2020, divided into the shares of rupees 100 each, out of which 8,000 shares were issued and fully paid up. In the first two opening lines, we came to know that the total authorized capital. So authorized capital that the company had, is 10 lakh rupee. This 10 lakh rupee should not be taken into consideration while you are solving the problem. Authorized capital, the meaning of authorized capital you have understood. Okay, next what is given on 31st 12 2020, divided into shares of rupees 100 each. Okay, these 10 lakh shares have been divided into number of shares of rupees 100 each. The value of each share is, the 10 lakh number of shares are not given. The number of shares is not a 10 lakh, it is the total value of authorized capital. This 10 lakh shares divided into, 10 lakh worth rupee shares divided into 100, that means, so 10,000 shares are there. Directly, how many shares are given, how many shares are there, that is not mentioned here in the problem. But instead of mentioning the number of shares, they have told the total worth of the authorized capital. Now you have understood that the total number of shares that the company is having is 10,000 shares. Out of 10,000 shares, 8,000 shares were issued and fully paid up. Authorized capital, so issued capital is there. How many shares are issued? 8,000 shares are issued out of the 10,000 shares. These 8,000 shares, the value of each share is 100 rupees, is equal to 8 lakh. The total value of issued capital is 8 lakh. This 8 lakh is very important here. 8 lakh, the total worth of the issued capital is 8 lakh and the number of shares is 8,000. These 10,000 shares we should not taken into consideration whenever you are going to solve the problem. Authorized capital will never be taken into consideration. Either you are passing journal entries or preparing a balance sheet. The number of shares issued, that will be taken into consideration. Okay, how many shares? 8,000 shares are there. Fine. Next, actually what happened here in the following, in June 2021, the company decided to convert the issued shares into stock. How many shares are issued? 8 lakh worth shares have been issued. These 8 lakh shares are going to be converted into stock. Okay, equity shares are there. So 8 lakh worth equity shares are there. These 8 lakh worth equity shares are going to be converted into stock. The company decided to convert the issued shares into stock, but in June 2022, the company converted the stock into shares. The stock, again this stock is going to be converted into shares of rupees 10 each. Shares of rupees 10 each, fully paid up. Okay, this is the problem. This is what given in the problem. Past journal entries, this is very important. Authorized capital we should not take them into consideration. The number of shares, issued shares 8,000 shares. Value of each share is 100 rupees and 8,000 into 100 is equal to 8 lakh. Okay, the first, what is going to be happen, these equity shares will be converted into stock. Equity shares are going to be converted into stock. Then how do you pass the journal entries? So equity share capital account debtor to equity stock account, because all the shares are going to be converted into stock only. Okay, what is the value of equity share capital? 8 lakh. 8 lakh equity share capital is there, and that whole amount will be converted into equity stock. So that will be 8 lakh. Okay, that's it. In narration, what you are supposed to write, all the 8,000 shares are converted into stock. That will be more than enough. Okay, that is the first one. And the second entry, what would be the second entry? In the second entry, the company decided to convert these stock into equity shares of rupees 10 each. So equity stock account debtor to equity stock account debtor, what is going to be converted? Equity stock is going to be converted. Equity stock is going to be converted into equity shares. So equity shares account, equity share capital account. What is the value? The value of equity share capital is 8 lakh only na. So that 8 lakh is going to be converted into equity share capital, that is 8 lakh only. Okay, 8 lakh only. So in narration, what you supposed to write? How many shares are there? 8,000 shares are there, but value of each share is not 100 rupees, but it is a 10 rupees. That means the total value of the equity share, equity stock is 8 lakh. That 8 lakh rupee is going to be converted into equity shares of rupees 10 each. The total value of equity stock is 8 lakh rupee. That 8 lakh rupee is going to be converted into number of equity shares of rupees 10 each. The value of one share is 10 rupee. So 1010 cancel, then 80,000. Then how many equity shares are there? 80,000 equity shares are there. That means in the narration only you have to write. So equity stock is converted into 80,000, isn't it? Equity stock is converted into 80,000 equity shares of rupees 10 each. Okay, this is how you are going to solve this kind of the problem. It is very basic. Okay, let us move on to another one. Before that, if you want to take it down, please write it down.